We're at the GAIM Hedge Fund Conference in Florida, and there is one hedge fund manager who is an expert on Japan. He is Kyle Bass of Hayman Capital, and he's with me now. Good to see you.
Good to see you, too.
Now, you will be speaking about your case about what's going to happen in Japan. It is not a good scenario. Tell me where we are in terms of the timing of things really changing for the worse.
So I think that, first of all, it's naive of anyone to say that we think we can pinpoint a turning point of a 70-year debt supercycle with any kind of precision. So I would be one to not be able to do that. But I would say that looking at all of the inputs, it seems to me like the earthquake and tsunami really changed. They had a secular change in the supply chain of many Japanese corporations, and therefore for the government, and then, or for the government's balance, and then you had the resurgence of nationalism rearing its ugly head in the Senkaku Islands between China and Japan, which has really made the balance of trade a lot worse. So it seems to me with Abe coming in the day after Christmas, and with the new, really the new BOJ, two governors and the governor himself being replaced in March and April, it seems to me like the current account's going negative at a period of time in which there are secular changes in the balance of trade. It all feels to me like it's right now.
You've spoken in the past about people being in denial when bad things happen, that you might be going through it, but you don't realize it, or you don't want to accept it. If it's right now in Japan, what does that mean? What denial stage is it? Finance ministers in denial? Is it the government? Is it consumers in Japan? Is it everybody else?
Yeah, I really think that it's all of the above, but it's really been the government that has failed to deal with its problems over the last 20 years. They failed to reset allow this kind of natural progress or process of debts being basically recycled, redone, and the economy reset. They never went through that process. They never went through this kind of Schumpeterian period of creative destruction that needed to happen, in my opinion, from a financial perspective. Now you've aggregated debts and you've smoothed volatility for so long, and now I think they're about to engage or see what happens when a vol event takes over and people realize that they're in an untenable situation, and I think everyone will realize that all at once.
And how will that manifest itself in the markets? What will happen?
Yeah, I think the yen will weaken significantly, which we've seen a nominal yen move. I know in today's standards, a 12 to 14% move in a period of time in a couple of months is a big move. But what I'm talking about is a loss of confidence in the currency's kind of purchasing power, and that means a very large yen move, kind of a disorderly yen move.
What does that mean in terms of
it means north of 200 in the yen to the dollar.
It's 200.
I think what you have to realize is when your debts are 24 times your central government tax revenue, and you have a secular decline in population, and all of the things are finally catching up to you, what happens when you have a debt crisis? Well, your currency collapses. The currency is a discounted present value of the future interest rates, and I think interest rates finally take off. And we're actually one of the few people in the world that believes their interest rates can move, and we think they're going to move uncontrollably once the yen really starts to move in a disorderly way.
If you are correct and we actually see that sort of dislocation, what are the ramifications beyond Japan?
I think so. Outside of the financial aspect of things, you have the more personal aspect of things. You have a third of the Japanese population is over the age of 60. You have almost a quarter over the age of 65. At a point in time in these people's lives in which they need their retirement savings, I think they're going to lose 30 to 50% of their savings. So it's going to be a social problem. Right? This is going to be a problem that has wide-ranging ramifications from a social perspective. I think the social fabric of the country will be torn. It will be stretched or torn, and that will have very large kind of global implications. And one thing you're already seeing when you're asking about the timing, just in recent days, you're seeing Schäuble and the Bundesbank say that Japan shouldn't politicize interest rates. You're seeing the U.S. talk about Japan politicizing rates. Everybody's trying to jockeying around these currency moves because everyone knows that devaluation is supposedly the way to freedom and growth and nominal GDP growth. And what they're realizing is you're starting to see the central banks not trust each other. I don't know if you really catch the gist of these communiques in the last few weeks, this global handhold from the G7 or G20
Right.
is starting to look like it's a little untrustworthy. And I think that's one of the other things that starts to manifest itself going forward.
Well, considering that we've tried to deal with our debt problems by having these coordinated central bank moves, that could not bode well going forward. If you have some sort of dissension, would that actually happen? That you've got Europe going one way and the U.S. going another way, and Japan is off in its own crisis?
Yeah, I mean, if you're the Japanese finance minister and you're part of the G7 group where you're not supposed to unilaterally intervene in your currency market to weaken your own currency, and yet your GDP is falling 3.5% while the rest are growing at 1.5 to 3 real, well, you have to do something. And at certain points in time, national self-interest takes over this kind of global kumbaya. And what you're seeing now is that starting to happen. And if all the world has is monetary policy going forward, if that's the only lever we have to throw, then we're all in a lot of trouble.
Well, let me ask you, beyond Japan, which obviously you're very bearish on, are you bearish on Europe? Are you worried about the U.S.? Are you worried about a bond bubble here in the U.S.?
Yeah, I think globally this is going to take many years to manifest itself, but if you take the time to realize that there is no way out for Japan, in my opinion, there is no way out. And so it's a matter of if and not when, or sorry, when and not if, excuse me. And I think when you get to this point where you realize, well, if there's no way out for them, then there really is no way out for the rest of us unless we change the manner in which we operate. When you look at our political, and we look at both sides of our aisle, it just seems to me like if there's no consequence for this profligacy that's going on in the U.S. Congress, let's say, meaning rates aren't moving against them, well, then they'll keep spending. So the central banks are enabling the spending. And until the bond rates move and kind of call us out, we're going to keep spending.
Will they do that?
Yeah, look what we're going to do. We're going to push off the fiscal cliff again. We're going to push off the debt ceiling. When we get to the goalpost, we just move it. And as long as the Democrats don't get their entitlements cut and the Republicans don't have their taxes raised, then everything's fine. That just means we continue to run trillion-dollar deficits. It's kind of the modus operandi today of the developed West, and all that means is running deficits. And what that's meant in the past is runaway cost-push inflation, and I think that's what we'll start to see coming next.
How quickly?
I think it takes years. I mean, even in the most egregious...
But you're talking about a dramatic spike. Is that what you're...
I think you'll have a dramatic spike in Japan in the next, 18 to 24 months. But I think we are years away from that, we being the U.S. and maybe even Europe. But those will come as well.
Are investors too complacent?
Yeah, I think so. I think that, the crowd rarely gets the big moves right, and especially the crises. So the crowd won't get it right. I think being complacent today is probably the single most riskiest time to be complacent in our generation. So it's going to be problematic going forward, and investing with the traditional endowment model or whatever model that people have listened to their financial advisors before to invest with is not going to work much longer.
So where is the safety in this sort of environment?
Yeah.
I know you've spoken in the past about actually people in Japan should buy stuff if their currency is being, but where is the safe investment, let alone forget about making money, just trying to find safety?
There's kind of a short-term, medium-term, and long-term answer to your question. The short-term, if you're asking me and I'm a wealthy Japanese person, I'll go buy productive Western assets. I'll go buy apartment complexes or oil wells, whatever I can buy in dollar terms or Swiss francs or whatever it is, or gold. You want to get your money out of yen, because if the yen's about to collapse, your purchasing power is about to collapse. But the longer-term answer to your question is, when you think about these periods of time, the insidious nature of a runaway inflation is it bankrupts the middle class. So the poor stay poor. The middle class, the people that have had some fiscal rectitude, the doctors, the lawyers, the civil servants that have saved their money and put it in the bank, those are the people that get wiped out in these kinds of, or let's say severely harmed in these situations. The wealthy that are actually levered with productive assets actually do the best. So the rich stay rich, the middle class gets wiped out, and the poor stay poor. That's an awful scenario for the world to engage in.
Well, and countries go to war.
Yeah.
If we go back a couple of decades, that's exactly what was happening in Germany.
Yeah, it's a sad state of things, but if you really follow this to its logical conclusion, and maybe I'm wrong about this, it means social unrest globally, and it's a problem.
We'll end it there. Kyle Bass, great talking with you.
Yeah,
Thanks
nice
so
talking
much.
to you too.
I'm Rhonda Schaffler. This is Reuters.